So you're listening because, like us, you want to look past the headlines, right? You see some news about a company, maybe a stock move, and you think, okay, what's really going on here?
Exactly. There's always more layers.
Today, we're digging into one of those stories. Smart and Final. The grocery store chain.
Familiar name for a lot of people.
Our guide for this is actually a YouTube video analysis. It's called Smart and Final Connect the Dots Part 4 by someone named Rantz.
And it lays out some pretty interesting connections.
That's our mission, really, to trace these big ownership changes, the financial moves around Smart and Final. We want to unpack what these sorts of deals, these, interlinked companies might mean.
Yeah, what does it signal for investors or even just folks trying to understand how markets work? The source video definitely flags some things worth looking at.
Okay, let's dive in. The video points out, way back in 2007, Smart and Final gets bought by Apollo Global Management.
Right. Apollo, a huge name in private equity.
And when a firm like Apollo buys a company, you start wondering about their usual strategy, don't you?
Oh, absolutely. There's often a pattern. They acquire, maybe try to grow the business, make it more efficient.
And then look for an exit, usually selling it off later.
That's often the playbook, yeah. Increase the value, then realize that value through a sale or sometimes taking it public, an IPO.
Which seems to be what happened here initially. Around 2012, Apollo sells its stake.
They do. The buyer mentioned in the video is Ares Management.
Ares Management. And the price tag, around $975 million.
So Apollo makes its move, sells to Ares, a key transition point for Smart and Final.
And then, just a couple of years later, 2014 rolls around.
And Smart and Final goes public. IPO time.
Gets its own stock ticker, shares offered to the public, the whole 9 yards.
Right. This gives the company access to capital, maybe for expansion. And it also lets earlier investors, like Ares in this case, potentially sell some shares and get some cash back. Liquidity, basically.
But, the story doesn't end there. Fast forward to 2019.
Apollo's back.
Yeah. They buy Smart and Final again, this time for about $1.1 billion. And they take it private again, off the stock market.
Which is interesting. Going public, then private again just a few years later. It suggests Apollo saw something. Maybe they felt the market wasn't valuing it correctly, or they had a new plan.
And it seems like they moved pretty fast on whatever that plan was.
Yeah.
Because the video says Apollo then turned around and sold Smart and Final.
To a Mexican retailer, apparently.
For $1.6 billion. Let's just pause on that. Bought for $1.1 billion, sold for $1.6 billion.
It's a reported $500 million profit. Pretty quick work.
$500 million. That's quite the return in a relatively short time frame.
It really is. And that kind of rapid turnaround, significant profit,
Yeah.
Well, it's characteristic of some private equity strategies, maximizing returns within a certain window.
But it wasn't smooth sailing for everyone. The video mentions a lawsuit.
Ah, yes, from investors.
Right. Investors who felt that maybe that $1.6 billion deal wasn't the best one on the table. That maybe leadership overlooked better offers to make the deal with Apollo happen.
That kind of thing can happen. Shareholders might sue if they believe the board didn't fulfill its fiduciary duty, its obligation to act in their best interests. They might argue a better price could have been achieved.
Okay, so we've got this cycle. Buy, sell, IPO, buy again, sell again. But this is where the connect the dots part really comes in, focusing on Ares Management.
The ones who bought Smart and Final from Apollo back in 2012.
Exactly. So who are these guys? Ares Management.
Well, this is where you start seeing how tangled these financial webs can be. According to Ares' own prospectus, that's, the big document they put out, the founders included people like Michael Arabetti, R. Kip DeVere, David Kaplan, Anthony Ressler, and Bennett Rosenthal.
Okay, hold on. David Kaplan, one of the Ares co-founders.
Yes.
He was also a senior partner at Apollo Management.
Bingo. There's the first major connection. A founder of the buying firm, Ares, was a top exec at the selling firm, Apollo.
Wow. So not just separate companies doing a deal, there's overlap at the very top.
It really highlights the networks. People move between these big firms. It suggests, potentially aligned interests, maybe shared ways of thinking about deals.
And it keeps going. The video mentions John Kissick, retired co-founder of Ares.
Let me guess. Apollo connection.
You got it. Also a co-founder of Apollo Management way back in 1990. And he also worked at Drexel Burnham Lambert. Remember that name?
Drexel, right. A lot of these guys came through there. It paints a picture of a pretty tight-knit group, doesn't it? Shared history.
Definitely. And then there's Bennett Rosenthal, another Ares founder.
Also from Apollo.
Yep, via Merrill Lynch before that. It's like a family tree where all the branches loop back. key players from Apollo starting or leading the firm that buys a major asset from Apollo.
It certainly raises questions, doesn't it, about how arm's length these deals really are when the leadership teams are so intertwined.
How independent can the negotiations be? For you listening, this isn't just like a coincidence. It makes you wonder how much these personal and professional histories influence the outcomes for shareholders.
Absolutely. Potential conflicts of interest are a key concern here. You need serious scrutiny to make sure the deal is fair to everyone, not just the insiders.
Let's zoom in on Anthony Ressler. Tony Ressler, founder of Ares, also a co-founder of Apollo,
Yeah.
alongside Leon Black.
Wow. Okay. So co-founded both firms involved in these deals.
Seems so. And their connection goes back even further. Both worked at Drexel Burnham Lambert.
That firm again. The one that got shut down by the government, right?
That's the one. So shared history there too.
It implies a common background, maybe a shared philosophy on finance that shaped both Apollo and Ares.
And then there's a family connection. Tony Ressler's sister, Deborah Ressler.
Okay.
She's also known as Deborah Black because she's married to Leon Black, co-founder of Apollo.
Wait, seriously. So Apollo, co-founded by Leon Black, sells to Ares, co-founded by Tony Ressler, whose sister is married to Leon Black.
That's what the source indicates. You couldn't make it up. Talk about keeping it in the family.
That really amplifies the conflict of interest questions, doesn't it? A direct family tie between the heads of the buying and selling firms.
It's pretty blatant. The video also mentions another Ressler brother, Richard. We might hear his name again later. But for anyone watching the markets, seeing these kinds of deep personal and family links, it's definitely something to be aware of.
It just underscores how complex these relationships can be behind the scenes of major deals. It's not just company A selling to company B.
The network spreads out even more. The video throws out names like Oaktree and KKR, other big private equity firms, saying they have links to Apollo and Ares too, though it doesn't detail exactly how.
Right, just suggests the web is even broader.
Then Michael Arrighetti, one of those Ares founders we mentioned, he becomes CEO of Ares.
Okay, leadership evolution there.
And interestingly, the video quotes him from April 2022, talking about betting on a retail revolution.
Huh. Given what happened with Smart and Final under their ownership, that quote is definitely food for thought.
And guess who else pops up with Drexel roots? Larry Berg, senior partner at Apollo.
Another Drexel alum. It's like a club.
Seems like it. And get this, Berg co-owns the Los Angeles Football Club.
The soccer team.
Yeah, with Bennett Rosenthal and Michael Arrighetti from Ares.
So they're not just connected through these finance deals, they're business partners in other ventures too, like sports teams.
Right. It shows these relationships go way beyond just one transaction. Deep networks.
That suggests a level of trust and collaboration that's pretty significant.
Okay, now shifting gears slightly. There was a big change at Apollo. Leon Black stepped down as CEO in March 2021.
Ah, yes, that was major news. The video links this to his ties with Jeffrey Epstein, right?
That's what it states, yes. And things get even murkier here. There's mention of an alleged situation involving a company called ESW.
ESW.
Yeah. And a $1 billion buyout that supposedly, according to the source, helped Leon Black avoid potential charges. It's complex.
And potentially very serious allegations.
Very. And the video adds another layer, saying Tony Ressler's brother, Richard Ressler, was reportedly involved in that ESW deal somehow.
So the Ressler family connection potentially pops up again in this separate, very serious issue involving Leon Black.
Seems that way, and it also mentions Leon Black's sons, Benjamin and Joshua, possibly facing scrutiny too. Again, we have to stress, these are allegations presented in the source video.
Of course. But it adds another dimension to the whole Apollo story, the leadership changes, and the intense scrutiny these figures can face. And the family links keep reappearing.
The connections just keep coming. Corey Colvin worked at Apollo after stints in places called Cole Capital and Griffin Capital. Just shows people moving within this financial ecosystem.
More threads in the network.
And there was apparently an attempt by Apollo to buy another company, AR Capital.
Okay.
But in the end, a firm called CIM bought it instead. And CIM is reportedly run by one of the Ressler brothers.
Which one? Anthony or Richard?
The video isn't crystal clear on which brother runs CIM, but the point is the Ressler connection again. Even in deals that didn't happen quite as planned, the same network seems to be involved.
It really emphasizes the recurring cast of characters and firms ordering these major deals.
And the network keeps evolving too. Josh Harris, one of the original Apollo founders, started a new firm recently, back in September. called 2026 North Partners.
A new venture.
Yeah, but who are his partners? People from Goldman Sachs and Apollo.
So even as new firms are created, those old ties, those established networks, they persist. They're foundational.
It seems like it.
Yeah.
Okay, so let's bring it back to Smart and Final stock.
Huh.
The video highlights something interesting.
What's that?
After it went public in 2014, its stock price, well, it didn't do great. It declined.
Before Apollo swooped back in and bought it again, taking it private at that lower price.
Exactly. And then the video draws a parallel. It looks at AMC theaters.
AMC, how do they fit in?
Well, Apollo was involved in taking AMC public, too, around the same time, 2013, 2014-ish.
Oh, okay. Another Apollo IPO.
And the video suggests Apollo placed people on AMC's board. It even kind of hints that maybe Adam Aron, the CEO, was one of those placements, a, quote, plant.
That's a strong claim.
It is. And then it points to AMC's stock performance, describing it as a pump and dump.
A pump and dump? You mean like artificially inflating the price and then selling off?
That's the implication in the source. And it draws a line from that pattern at AMC back to Smart and Final's journey. The suggestion seems to be that these private equity maneuvers, they benefit the firms hugely, but maybe not the average shareholder.
That's a classic criticism, isn't it? That the PE firms engineer these situations for maximum profit for themselves, sometimes leaving public investors holding the bag. If the pump and dump claim is accurate, that's a serious market manipulation tactic.
And the video reminds us again about that lawsuit over the final Smart and Final sale, the one claiming it was undervalued when Apollo sold it. It all ties back to whether these deals truly served all shareholders.
Comparing Smart and Final and AMC, both influenced by Apollo, it definitely raises questions about who benefits most when private equity takes companies public and then potentially private again, especially after stock declines. The lawsuit really highlights that tension over fair value.
So, wrapping this all up, I mean, the big takeaway for you listening has to be this incredibly dense web, right? These connections between firms like Apollo and Ares.
It's not just one or two links. It's shared founders, executives moving back and forth, even direct family ties, like the Ressler Black connection. It's intricate.
And knowing about these underlying relationships gives you, we think, much richer context when you see news about buyouts or stock movements. It makes you ask different questions.
Yeah, you start thinking about the motivations behind the deals. Is it purely about the business fundamentals, or are these pre-existing relationships playing a significant role?
This whole Smart and Final story, based on the source we looked at, it really pushes you to think about transparency. How much do we really know about who's dealing with whom in private equity and on public boards?
And are there potential conflicts of interest just baked into the system because these networks are so tight? It's a critical question for anyone trying to understand modern finance.
Exactly. So maybe the final thought for you is, looking at this case, what should we all be asking? About transparency, about potential conflicts. How do these deep, often hidden connections affect the market, affect companies, affect investors like you?
It's definitely something worth thinking more about and maybe doing your own digging. There's always more to uncover.
Couldn't agree more. Thanks for joining us on this deep dive.